What's going on, guys? Happy Sunday. We got some breaking news here. We got US and Iran agree on a peace deal to end the war. Trump and Pakistan both acknowledged it, and yeah, they made a deal to open the Strait of Hormuz, end the war, get oil flowing normally again, all that good stuff. So, no direct comment from Iran yet, it looks like, but Trump posted on his TruthSocial accounts talking about it, and a Pakistan, let's see, like a mediator from Pakistan posted on Twitter that, the deal has been met, and both sides declared the immediate and permanent termination of military operations on all fronts, even in Lebanon. So it sounds pretty serious. On Truth Social, Trump said, "The deal with the Islamic Republic of Iran is now complete. Congratulations to all. I hereby fully authorize the toll-free opening of the Strait of Hormuz." So he also said they're going to remove the naval blockade. He said, "Ships of the world, start your engines. Let the oil flow." President Donald J. Trump. So, with the headlines he would say on Truth Social about, oh, deals met, oh, deals not met, this really isn't anything new. He said some pretty strong statements to both sides. So, I feel like this doesn't shock the market as hard as it would if it came out of nowhere. Like it did back in the beginning of April. That was like the first time he really said something heavily positive about the situation, and we saw, like a huge pop off of that. But index futures are still pretty healthy off of this news. We got the S&P 500 is up 0.8%, the Nasdaq is up 1.28%, and the Dow is up 0.6% currently. So, we're only about an hour into futures being open, so still pretty fresh. Buyers will step in as the night goes on, I'm sure. If it's going to continue higher, it'll be a gradual melt up. Um, the main thing is that's real interesting is percentage of the percentage chance for Strait of Hormuz to return to normal popped, but nothing crazy. So there are a few different dates here. Like before August 1st, it popped up to about 58% from its low 44%. It's a good pop, but you would think if the market really had like concrete belief in like this following through, it would shoot up much higher to a much higher percentage of happening. Now, this is just call sheet, so it's not really anything crazy. But I mean, $21 million in volume on an event like this is pretty legitimate. That's a pretty good amount of money flowing through. So, I mean, call sheet isn't a terrible gauge of how money is feeling about certain events. So the fact that this didn't shoot up even more is a little crazy. Even right now, it dipped a little, so definitely interesting. Index futures, on the other hand, it's a pretty strong bounce. If you look at the S&P 500 and the Nasdaq here, I've got both of these charts up. We got S&P 500 on the left, Nasdaq on the right. You can see these are like each bar is a day here. So in the last couple of weeks, they both came down. We had a little bit of a profit taking scare with the AI and just some other bad news. But Trump on, what was it, the 11th, in the middle of the day, canceled some strikes that were planned for that night. So that caused a little bit of a pop. And on Friday, we had the SpaceX IPO. So the market was pretty much focused on that. It didn't really go anywhere, but it was still a green, healthy day. It was pretty solid to see, especially after the prior week, just having days that could not hold green and completely sold off. So definitely interesting. Right now, with how the futures are gapping up, these charts are also set to gap up. So if the S&P 500 is up about 0.8%, we'd see what is that, like a $5 to $6 pop. So it would go from 741.75 to about 748, which would put it right around here. So where this crosshair is, it's nothing crazy. That would still be about $12 off of all-time highs, which, off the top of my head, I would guess is about 1.5%. So definitely some more room to go until we see new all-time highs again. For the Nasdaq, that one was up 1.3%. So $721, that'd be like $10 pop. So we'd see it up about 730, 731, 732. So I'd put it right up here. Again, like these would kind of just be reclaiming from where they really started to break down on the 5th. That one day where we actually saw like a gradual sell-off day. So recapturing that and coming up higher would be pretty good to see. We're not out of the woods yet. We're not, touching new all-time highs, but this is a pretty good green light. As long as this holds, it's a pretty good green light for the week. They did mention that this deal isn't going to be signed until Friday. You can see here that on Friday the 19th, that's when the signing ceremony will be. So everybody's optimistic about it now, but we need to see this optimism and like the concrete structure of this deal flow through for the end of the week. We don't want to see bombs going off in Iran. We don't want to see ships in the strait being attacked. And we surely don't want to see someone from Iran saying, hey, we did not agree on this. We still want our nuclear weapons or whatever they might complain about. We just need to see it stay solid, because any doubt, any aggression, any sign that this is not going to be followed through with and signed off on Friday could turn this market sour real quick. We still have a lot of pressure. We didn't have the greatest earnings lately, and if this war tension picks back up, it could be pretty rough. We got a hot inflation print. We've got a new Fed chair coming in, and I think FOMC is coming up soon. So it's going to be interesting. There's a lot going on this week, and if we're going to reclaim these levels and go back up to new highs, we need to see it soon, because all these dips that are temporary, they usually recover in a like symmetrical fashion. You can see like right here, it comes down into early April, and then it shoots right back up in a symmetrical fashion. Honestly, even quicker for that one. But this mini dip here, we can see that it hit a high on the 14th of May. In 3 days, it came down to its low, and in 3 days, it was back up to its high again. So if this is going to recover, we've got 1, 2, 3, 4 days to meet its low. We got 1, 2 in the next 1, 2 days. We would want to see it, get back up to those highs, because that would be 4 days down, 4 days up. So ideally, if this dip is really going to be, a big fake out and it's going to go back to new all-time highs, we're going to want to see this bounce be pretty aggressive, just as aggressive as the dip was. So that's what I'm going to be looking for. If it kind of stalls out, we could potentially be seeing a lower high being formed on the daily chart, which could, lead us to retest these lows down to 722.50, or even lower if it breaks through and, we actually get bad news. And it's just real interesting, because at least when before these prior 5 candles came through, when it was this first red day, it really did, look like the classic saying of staircase up, escalator down. It was looking really, really scary. So it held its own and it's coming back up. But when this bad news comes in, we really didn't even see an escalator down yet. We saw a couple heavy red days, but all things considered, we're right back up. Like if the market stays exactly where it's at right now and we open up, we're going to be pretty much right below where we were when we started the little dip about 2 weeks ago. So it's really not that bad. The main things I'm going to be looking out for, like I said, is any type of Iran statement that's negative, kind of contradicting what the Pakistan mediator and Trump are saying. Also, any headlines that include, ships getting attacked in the Strait, or any type of tension rising in the Middle East. Gotta look out for that. And then also just watching oil itself, because oil reacts to those things, and oil is going to be a telltale sign of, what is really going on. So oil coming down, that is good. That takes pressure off of just about everything. Stocks, price of gas, go fill up your gas tank. The price of everything, because, when things need to get delivered to stores, the trucks that deliver them there, they take gas. So gas going up raises the prices of so many things. So the price of gas coming down, that's what we like to see. And that's going to kind of, put some ease on the economy for sure. Like if people are worried about CPI and oil comes down, CPI will probably go down. So people won't be too worried. So yeah, so far it looks pretty good. We'll see as the night progresses and as the week progresses, because like I said, we have until Friday to wait for this to be signed off on. So just keep an eye on that. We're not out of the woods yet, but all things considered, don't be afraid to put some money into some stuff and go long. Again, this is a green light as far as I know. And unless something else happens, the light will stay green. And you know how the market is. It's going to grind up And if nothing gets in its way, it's going to reach new all-time highs and break out towards 770, 780, 800, all that good stuff. So be careful, but good luck. Thanks for watching. I'll see you later.